Good morning, everyone, and welcome to the European crossover webinar. And we've seen the euro continue to push higher, but we're running into a stall area. I posted a chart here with the euro yesterday. Hang on. We've got a triple confluence here in a sense. I mean, we got the 1280 level coming in place. You can see that here. Okay. You can see that right here, we got the 1280 level confluencing with 1277 being the 50% of this entire move of 1107 to 1448. And 1276 is 161% of this move right here. So we got a little bit of a triple confluence coming in here. Big news overnight was obviously the Australian, the RBA. Not a whole lot of reaction here. I mean, we've gone and pushed higher. So I think some were expecting we might dip, and that'd be a great buy. I'm turning, we pop back up, but we've taken that with really, if you remember, that was fully priced in here. Another big mover today, we talked about this, was the dollar CAD. I'd indicated how important it was that if we lost 34.77, that would generate a sell signal. How critical that was, and that it was going to leave a bad taste in the bulls right here. But if we broke past 77, we'd see further selling. And we talked about this bar in the Asian analysis here. The daily candle has bulls concerned because we got above that elusive 3504, and obviously it's more prominent. You see the reaction here. When you take a look at here on the 2-hour chart, we are coming into a little bit of support down here on this 34.15. But you see continued further downside here. Obviously, the impact of the dollar sell-off here, obviously, which is a factor from Bullard's comments that just, perpetuated that move even lower. Peso did make a move up in here, closed up here to this 1988. We did have 75 and 80, so pushed a little bit further. Now we're looking with the peso that it could potentially go to 1995, and 1992 is a 61% right here. You can see that we just about almost nicked it right here. Actually, we had 1988 and kind of dipped back. That was further I thought we might make a move. I thought we might make that move today, and then potentially tomorrow you could probably see some kind of relief. And if the Mexico and the U.S. try to work something out, you could see this come back, but we shall see. So we'll go on and take a look at the news on the morning bid. With Barack Obama visiting Britain 2 months before the Brexit vote of June 2016, he famously warned the UK would be at the back of the queue for any trade deal with the United States if it voted to leave the EU. Wind forward 3 years, and PM Theresa May will be hoping for more encouraging words from Donald Trump when they hold a joint news conference this afternoon after a meeting at 10 Downing Street. Head of the talks, May has already made a pitch for a closer commercial relationship, notwithstanding the controversy about the better access to the U.S. would demand Britain's health sector. Expect mass protests and the flying of the Trump baby blimp today. At least 100,000 people are expected to march through the Czech. I'm not going to go into any politics. I'm not interested in that. Let's move on. Following world markets' dramatic Fed rethink over the past few trading days, Tuesday offers some hopes for a reality check on just how monetary policymakers will now respond to the escalating Sino-US trade war, rising recession risk, and the tech sector nerves. Even though futures markets have been shifting spectacularly towards pricing in a Federal Reserve interest rate cut as soon as next month, that's something that we've been going over for about 2 weeks now. and the possibility to up to 3 cuts in total by the year end. As they measure the impact of the reheated trade war, JP Morgan's global aggregate manufacturing sentiment index dropped to a contractionary territory in May, and its lowest since 2012. And any sign of détente ahead of the weekend's G20 finance chiefs meeting in Tokyo appeared remote, as U.S. Trade Representative's office and the U.S. Treasury on Monday accused China of pursuing a blame game over the row. Stock market lows were compounded by news that U.S. antitrust agencies were gearing up to investigate tech giants Amazon, Apple, Facebook, and Google over misuse of their massive market power. Facebook stock dropped more than 7%. Google, parent Alphabet, lost more than 6%. Amazon almost 5%. And Apple dipped 1%. And it does say in the NASDAQ, recorded an official 10% peak-to-trough correction from the highs of just 1 month ago. Shanghai and Hong Kong and Taiwan stocks ended the red on Tuesday. All this underlined the scramble to reprice the Fed policy and the biggest two-day drop in U.S. two-year Treasury yields since the crash of 2008, egged on by comments from St. Louis Fed Chief Bullard that a rate cut may be needed soon. The 10-year U.S. Treasury yields plunged as low as 2.06, their lowest since September 2017, before a tentative stabilization overnight left them still under 2.1%. The recession flag from yield curve between 3 months and 10 months continued to fly furiously, with the inversion now as high as 27 basis points. Bullard's comments aside, investors now need to see if the Fed officials endorse the market's rethink of its policy horizon. Fed Chair Powell and some of the other central bank members, most senior figures, will all speak at a strategic policy review conference in Chicago later. In downturns over the past 20 years or so, the Fed has typically managed to cut interest rates before the economy officially records a recession. Trade war and recession fears have swept across the world. Meantime, with the Reserve Bank of Australia cutting its rates to record lows overnight and holding out the chance of further easing. With ECB meeting on Thursday, Tuesday, today's release of the flash zone, Eurozone inflation numbers for May will likely sketch the backdrop for a dovish message from ECB Chief Draghi to match the global mood, also address what's set to be a nervy summer of political and electoral risk across Europe. But for now, the Fed rates rethink is dominating, and that's what's taking on the toll on the dollar. With the dollar index falling to its lowest in more than 2 weeks, the dollar yen to its lowest since January, euro dollar pushed to its highest since April. And Australian dollar held its ground Tuesday after the country's central bank delivered a flagged cut in interest rates. There's more resistance around 70.20, and I've talked about that. We talked about the 70.27 area. The RBA cut its rate 0.25% to 1.25. Misery wage growth and sliding home prices have taken a heavy toll on consumption, as illustrated by data. Retail sales unexpectedly fell 1/10. The central bank also said left the door wide open to a further move, with Governor Philip Lowe saying they should be watching closely to see employment picked up as desired. Given the shift in stance, we now expect to see a second cut in August, said Sarah Hunter. And with global conditions deteriorating markedly and the U.S. heading for a sharper than anticipated slowdown as a result of its disruption caused by the tariffs imposed on China and Mexico, we think it's likely that we'll cut for a third time this year in November. And lastly, with the dollar, drops as rate cuts and bets mount. And we just covered that. Let's see. So let's go on and move into the analysis. I think this is all pretty cut and dry now. Taking a look here with the euro. So here we are making this move here with the euro now. What we'll do is we'll take a look here. That'd be a big push if it made up there at 1304. But let's go and take a look on the 2-hour chart. And for right now, we're just going to focus right here. This is 1280. That'll be our resistance. And support now will come in. Well, 1220 was that area that we were looking at the time. You can see right here. We're going to use that as our support now, which was resistance yesterday, if you remember. So for now, we'll just go with 1220. There's a little bit more 1214, but I think any dips against that 1220, they would try and defend. So right now, we'll go with 1220. Before we get too far ahead, let's go and look at what's on tap for today. We do have HICP flash. Let's take a look, and that's going to be at the top of the hour. CPI, and let's take a look as we come into the States. Oh, and then we have dairy prices, but there's coming in, we have ISM New York index, also Mexican consumer confidence, and durable goods here, and factory orders at 10 a.m. Eastern. Yeah, let's go and move into the cable. Okay, here we go. And looks like we made it into that resistance. We had the 2680, mentioned 2714. We ran right into this resistance here, and they kind of poked their heads a little bit above it, but no real move here. So we'll stay with this 2680, no changes. Only difference is now we'll move in light of with the dollar, we'll move the bias chart support a little bit higher. Just go right there. 2625. And let's go and move into the Australian dollar. Well, wasn't much of a big amount of fireworks whatsoever here. And the Aussie just held its own. The rate cut we saw in here was 100% expected by the Reuters poll. So quite the move here, or should I say lack of move. Let's see here. So we're gonna still keep this one here, the 7027. I think we didn't even have it at that point. We were talking about where it could spike up. This is our initial resistance here, I think it was, but it's actually looking here at the 7027. If they with the dollar looking further out, if it can push up. So yeah, we already had the 7027. So we're gonna keep that. And as far as support, let's move into the 2 hour. We're going to go with this because thinking things have started to turn around. We'll go right here with the 69.32 for support. And let's go move into the Kiwi. Well, we're starting to see a little bit of a solid rebound here with the Kiwi. Let's take a look here on the intraday, or 2-hour chart, I should say. It's going to be right there, 65.42. Things are turning around now. There's a key level before the 66.12. I think we can still make it up here to the 66.56 at 38%. And actually, the Kiwi has responded better, really, or held up overall than the Aussie. And actually, it had been bludgeoned for so long. So, although I think we're going to see some resistance here, let's take a look right here. 66.43 right there. Let's go 66.43. Let's look on the 2-hour chart. Yeah, you can see that right here. It's called 66.42. Now let's go to the dollar CAD. Well, we talked about this. I mean, I've gone over it so many times remember about it popping itself above the foxhole, 3504, and being shot down, shot down, shot down, shot down. And then we get here, we kind of hold, and then we kind of dither-dattered on Thursday, and then we push up on Friday, but we couldn't hold it. And my thought process is that, and I mentioned it, and here's the analysis, dollar CAD closed above the elusive 3504, but the daily candle has bullish concern. So, I mean, it's like, I've been waiting. Oh my God. Finally, we're on our way. Okay, 36, 37, whatever. And then Friday, we kind of finished here, and you're looking, well, I mean, I got my close above 135, but I'm not too happy. I mean, this thing really needs to go on and start Monday on a pretty good clip. And then we start Monday, and we're just barely holding our own, and we start rolling back, and we start to slide 35. And so my thinking, once again, right or wrong, I try and put myself in the other trader's shoes. I'm like, you know what? This is a bunch of BS. Look, I think I've had it with this dollar CAD. And look, I know one thing. If we go below 34.77, it ain't good. And I'm going to go and put my stops just below that in person. I'll put mine at 34.60. Another person, I'll put mine at 34.50. And I think, to me, I think that's what's come about now, is that, you know, we look at that. That's why I have this. You can see this across these these touches, these closes. Really important. So by losing 34.77, you can see that it exacerbated the move, and we're seeing that continued follow through. So at this point, from a bigger terms perspective, the resistance would be 34.77. Let's take a look, and it'd be heavy resistance. That. Take a look here on the 2-hour chart. Yeah, we'll just go with that, 34.77. Big time resistance. I think this, like I said, I posted, if it closed below 34.77, it's a sell mode. So 34.77 is huge, and any moves back towards that, the market's going to want to go and sell that. Which, you can see here was clearly support at the time. Now support here is right here. You can see that. 34.15. I think we're going to make a move down here. As I was saying, looking for 33.82 to start with, but 34.15 for today. Okay, looking at the dollar peso, we did make this move up here, this 1988. That's just, it's going to keep it simple. That's going to be our resistance right there, 1988. Right there. We just about nicked it right there. There's a good confluence, or got a good zone there between 1988 to 95, and 1992.5 is a 61%. So they were still pushing, clipping along. Like I said, if they come out with some kind of a short-term resolution on this thing, then we're going to go and see this, really come apart rather quickly. Let's take a look at far as for support. Well, the moves can come back fast and furious, so the resistance or the support right now is going to be right there at 1959.3. Guess we just call it 1959, keep it simple. With the moves we've had. Remember, once they make that decision, we could quickly slide down to 1941. And let's go move into the dollar yen. Well, with the ongoing fall in equities, we've really pushed this. We've actually come into some nice support here. There was that next zone level, and we're looking at 777. Or let me see, 778 right here. That's going to be support. So we're going to use that as support. No changes, although we're looking for potentially a bigger move down here to 676. But for right now, we've really come off quite a bit. So we're looking here for 778. And then on the bounce back, if we get a bounce back here, Initially speaking, it's going to be right there at 837. Starting to see the euro come back off a little bit as the dollar index starts to pull back up from this little triple confluence area here that we talked about. 1280, confluence of 1277 to 50% and 1276 to 161% of this move. Now let's go into the cash dollar index. So we had a nice, very nice little overshoot here. There's some support coming right there. You see that 97.01? We can still push down to 96.81. Obviously, if what's his name? If we get some more comments, we are seeing some Fed officials talking today, so that we could push this further. This is a good little area, this 97.01, but we're gonna go right here, which coming up with the trend just for right now, this 96.81, if they try and push it a little bit further. So let's go with 96.81. The 97 is good, but I don't want to just go and put the 97. And you can see, because you can see the touch is coming right across here. You see this close here? But then if we do get a couple of Fed officials going and reinforce what Bulletary said, then we're going to probably test those lows and take them out, and then we'll come back. So your risk level here would be this 96.81. Now, we'll take a look here on the 2-hour chart. The 46 might be a little bit of a stretch. But you know where your marker is, your demarcation. So we'll go with 97, right there, 97.44. Right there, 97.44. Let's go and swing into the cross rates. Well, it looks like we held this this area here on the support, what was it, 7068. Yeah, 7069, that's held right there. Can put this on the 2-hour. And there's our resistance here. And the Kiwi can move a little bit higher, so we'll actually move that up to 71.46. And let's take a look here at the euro yen. So we've gone and moved in, held this area here, and we're looking at 21.58. Obviously, things have turned around a little bit better, and also the euro is performing better. So the resistance is going to come in. If we can stretch that a little bit further, some good resistance there at 21.79, but it's not that much further. Let's go right up here with, if we can get the yen to come off a bit, we'd be looking for a move potentially, and that's not for now today, potentially to 21.96. Let's see if we can move that up. Go with 21.97. A little bit further extended move. With support right there. Might be a little bit too low, right? Coming in. 21.28. Let's go into the euro odd. Now we had a resistance here at 61.60, and we went up there and just nicked it right up here to the pip. We're going to go and keep this one here, the 61.60. And let's give it some room here. We'll go with 60.62 on the downside. We'll call it 60.61. 60.61. And onto the Euro Kiwi. This was kind of stuck in a little bit of a range here. I like this upper resistance area for now, but it's a real tug of war here. Let's just keep this in check. 7103, no changes. 7083, 7008, and we had 7103. Ended up calling it 7105. That's fine. As you say, close enough for government work. 7008 on the downside. Let's take a look at the RCM. For now, it's going to be right there, 7508 for support. And on the upside, some nice volume coming in that area anyway. We could gun the stops a little bit, so we'll go with 7586. Now the guppy, oh my goodness, this thing is really hanging on to the basement. We still have this 3628. You can see that level here. No need to change that. And on the upside, this thing looks sick as a dog. For right now, if we do hit some stops, we need a little bit of covering. I'm going to keep this even though it's a ways up, but we could get that far, which would be 3780. And lastly, sterling versus the odd. Boy, hugging the basement again. As I say, college days, hugging the commode. Hang on. It looks hell bent to get down here to this 8097. And the resistance is going to be right there. 8205. And we'll just do a quick recap. Looking here at the euro, euro's starting to slide a little bit further. Here's that triple confluence that we're talking about. 1280 confluence with 1277, the 50% of 1107 to 1448, and 1276 being the 161% of here. So got a little bit of a triple confluence there. Easing back a bit here on the euro. Dollar CAD on the sell mode. Once we got that daily close below 34.77, got some support here at 34.15. Cash dollar index trying to find a little bit of support in here, allowing the euro to dip a little bit here. Resistance is going to be 97.44. This is a good little area here, this 97.01, right in here. Actually, look at it on the daily. Right there, you see that touches coming right across. But like I said, we'll allow for, in case you want to break out these lows, get some a little bit of Fed speak. Peso's still open. I thought we had a pretty good run. I was thinking we wouldn't get to this close to this 19.9 until today, but they did, and peeps are already thinking, well, okay, they'll probably work out something with Mexico, so it's already starting to fade a little bit here. I think any moves back towards the 80s they'll probably want to fade them towards 1981. And dollar yen starting to get a little bit of a perk, and you're pulling back here also. So that's what we have here for the European crossover. I'll get this posted. Thanks for joining us, and have a great day trading.